Hey everybody, good morning. Futures Brizio here. It is Sunday, September 21st, 2025, 11:30 a.m. Hope everybody had a great week. And I was away again. Seems like I say that a lot, but I was away Monday, didn't get back till Thursday night, so I didn't really trade much. I had one open trade in corn this week that I ended up closing on Thursday. Um, but because I really was away from my charts, I didn't really trade much this week, and I certainly didn't have time to make any videos. So I got back on Friday, just kind of closed the week out, but I didn't open any new positions on Friday. So I figured I'd just jump in here and say hello. And as always, make sure you smash that like button, subscribe to the channel. Any questions, comments, leave them down below, the usual. So we're going to continue on this commitment of traders theme. And I've had time to go back and do some back testing, looking at various markets and how the COT data plays out in terms of where price actually goes, and try to find some that are a little bit more clean and um, aren't as erratic in terms of how they line up with the COT data. Because you're going to find it, you back test this in various markets. I mean, you can look at this really in any futures market, or at least a lot of them. And you're going to find sometimes you look at the weekly chart that they're very, they do follow very closely. The price follows very closely to the COT data and changes, especially at the extremes. But then you got to find some where it's all over the place, and it's not really useful, in my opinion, for those. So I've kind of streamlined back a little bit. I've added a few markets to look at just strictly with the COT data, and I've also combined it with seasonality too. Okay, so um, there's I'm kind of doing both, and I mentioned this in the last video that the seasonality can give you an extra confluence. I mean, neither one of these are like indicators or trading strategies. They're tools to use to help you find good times to potentially enter the market. And again, don't be intimidated by the fact that you're looking at this on a weekly chart. And the reason why you're looking at it on a weekly chart is because the COT data is only put out once a week. So you kind of have to analyze the COT changes on the weekly chart. But again, you're not trading on the weekly chart. You can still go down to whatever time frame you want to trade on, whether it's the daily, the 4 hour, the 1 hour, or lower. But you want to use the COT data and the seasonality to kind of give you your overall direction, no matter what time frame, again, you ultimately go down to analyze the trade on. It doesn't have to be the weekly chart, but you start on the weekly chart because that's where the COT data originates, because it only is published once a week. So we do have the new data that came out on Friday. So this would be for the COT report that came out this past Tuesday, which was what, the 16th. But remember that the data that the CFTC releases the data on Tuesday, but the data is processed on Tuesday, but they don't release the new report until Friday afternoon, basically late in the session. So we do have that update now from Friday. So this would be through September 16th then. Okay. And if we look at it from a standpoint of these various markets, which we'll jump into here, and I can just give you a quick rundown of what I'm seeing. And I've I did eliminate a few markets, but I've also added a couple. So I'm looking at right now about 7 different markets, which is a lot. I probably will cut that down more. I honestly don't really like following that many markets anymore. I just feel like it's too much. But for the purpose of just kind of continuing to backtest the COT data, I'm going to stick with this for now. And then, like I said, I'll be using shorter time frames to potentially look for setups going forward. So we're going to start here, and this is 5-year T notes. I know you can't see the entirety of the left edge of my screen, but these are 5-year T notes. So these are basically a bond instrument in the U.S., and these are the 5-year notes. And these seem to work pretty well. And the very interesting thing to work out to look at right now is we actually, with this latest report, have the commercials. So the commercials are in red. These are the commercial producers, the commercial traders here. And then these, the green line are the non-commercial large speculators. Again, this is your hedge funds and your your big money people, and the commercials in this case for bonds. I would imagine this is probably like governments and banks and things like that. That deal with these on a different level. And you can see, ideally what you want to see in any of these is when these two are at extremes. In other words, with this indicator, having one of them being up in this kind of extra highly long, I don't want to call it overbought, it's not overbought, but this extreme long position and one being extreme short positions, and then they start to cross out of that area, which is what we're seeing after this latest report that came out on Friday. That's what we're seeing. So what does that mean? Well, if we look back in time with this, when the commercial traders come out of, I got to move myself over here. When the commercial traders come out of this this extreme long position, prices tend to go down, and vice versa. Obviously, when the non-commercials tend to come out of this extreme short position, prices tend to rally. And if you go back and just look over time, that's generally what happens here. Okay. And so again, but nothing's perfect. So if we're looking at the price chart now, you can see, really 5-year T notes have been in a range essentially for a long time here. This goes back over 2 years. We've basically been inside this generally big range. But of course, this is a weekly chart, so even though this looks like a pretty tight range, it's quite large on a shorter time frame, right? So you certainly can trade this. So what does that mean? Well, I mean potentially, and again I say potentially because we don't know, that maybe it's a good time to start looking for short positions because we're coming out of these extreme areas. So we can go down to like a 4-hour time frame, and you can see that maybe we are setting up here with some lower lows, lower highs. So that's potentially what I'll be looking for. Now, the other aspect to this I talked about is seasonality. So this is the website. If you'll watch my last video where I broke this down more, I'm not going to rehash all that, but this is insiderweek.com. And if you go to the tools and then to seasonality, so let's find 5-year T notes here. We'll go to financials. Here's 5-year T notes, and let's look at the seasonality here. It gives it a minute to kind of crunch the numbers. And here we go. Okay, so what do we see? So of course, this green dot right here, this is current year, and this green dot is where we are right now. Okay, and here's our latest report, or our latest reading, which was on the 19th. That was Friday. And then you can see, generally speaking, if we look at 5, 10, and 15-year history, which are these other 3 lines, we generally are trending down here in these markets. I mean, at the 15-year, it's kind of level, but on the 5 and 10-year, you can see we generally have a seasonality dip here that runs through basically late November. So we could have a window here for about 2 months where seasonality lines up with the chart. Okay, so that can help you lend a little bit more credence to potentially looking at short positions. Okay, so generally that's it. All right, those are the 2 things I'm looking at. And then again, what I'll do is then monitor shorter time frames and look for, go back to regular technical indicators, right? Whatever you want to do, whether you're looking at market structure, swing high, swing lows, supply, demand, support, resistance, some indicator, whatever. So you've kind of got your bias based on the COT and seasonality from the weekly chart and from the seasonality chart. And then you can start to look for your entries further down the road. Okay. And again, you can trade wherever you want here. I mean, we've got a daily chart here. We've got, you got the 4-hour, the 1-hour, I mean, whatever. If your bias is that you're looking for shorts here based on seasonality, then, then you're using your technical skills and whatever you use for technicals to try to potentially find areas of opportunity. And if we look at this from the standpoint of this this range, when we are another confluence, I guess you could say here, is that we're back towards the top of this range. And as long as we're staying inside this range, this is a potential area where we see prices kind of bounce and start heading lower. All right. So that's basically it with 5-year T notes. So my bias here is short. All right. If we go to this is another one I've added. This is the YM. This is a E-mini Dow. So you have NASDAQ, S&P. Well, this is just another one. You also have Dow futures, and you have Russell 2000 here in the US. So here's the Dow futures. Okay. And we have prices in the extreme areas right now. Now, the market has been obviously very bullish. The stock market has been very bullish. We scroll out here on the weekly chart. You all know, if you've been following this at all, that these markets have been very bullish. Now, we're not in any kind of, we are in extreme areas, but we're not crossing out. You can see last week we came down and just tipped the edge of this, but now they're heading back. So we're still bullish in this market. And if we go to seasonality and we look at the YM here, the Dow E-mini on the seasonality. And let's see what we get here. Give this a second to load. And you can see we are heading into another seasonally bullish time here. Okay, so again, I don't know. Doesn't mean this is going to, but this is basically now through the end of the year. We're looking at bullish conditions, and we still have the commercial and the non-commercials maintaining what would be an extreme area. And here, the way it works generally is when the non-commercials come out of the an extreme long position, prices generally go up, and they did that way back here in June, and they're now down in this extreme area. And I mean, you could say ideally that this isn't great because now it's come out of here and it's way down here, but as long as it remains in this kind of highly net short area for the non-commercials, I know it seems counterintuitive that you're still looking for longs and the seasonality is on your side. And the opposite, when the commercials come out of these extreme short positions and start lifting the shorts, the prices tend to rally. Okay, and so that's kind of where we're at right now. So generally bullish on YM, which is, the stock market in general keeps remaining a bullish posture. This one, I will admit, is not my favorite, but it is something to look at. If we look at cattle, I wanted to go back. I used to trade cattle, as you guys know, if you've been watching this channel. But let's just look at cattle really quick. To me, cattle is neutral. I mean, look at this thing. It's like all intertwined and jumbled up here really since about April. Now, the market's been in a very steep uptrend, but we have had basically this area in the middle here where the commercials and non-commercials have just been basically battling it out in the middle. And you probably heard the old phrase about not dithering and, don't diddle in the middle. Well, this is kind of one of those things. So I'm neutral on this from a COT data. And then if we look at the seasonality for live cattle, and we're going to see where that sits. We're generally still in an upward progression here through the end of the year in cattle. So even though we don't really have much in the way of direction from the COT data, we do have quite a bit of direction here from a seasonality standpoint. But this one I'm neutral on from just this aspect alone. But again, this is the weekly chart, and let's see what happens here. But I think there's better markets to trade. All right, let's look now at soybean oil. I took soybeans itself off the board because I found it in backtesting to be pretty erratic. Soybean oil, on the other hand, which obviously is just a byproduct of soybean production. You have soybean oil, soybean meal. So this is soybean oil. And if we look here, we did come out of these extreme areas back in mid-August, so a little over a month ago. The weeklies crossed out, okay? Now we're in a pullback phase. This is pretty typical, right? So we're looking at when this happens to have prices come, in this case, when the commercials come out of the extreme short position, that prices do tend to fall, okay? And obviously just the opposite for non-commercials. When they come out of their extreme long position, the prices tend to fall. So then you can see we have been falling here. Now this is a weekly chart. We still have pretty good bullish market structure here, right? Higher low, higher low. But you can see it's changed a little bit here, right? these little pullbacks were pretty straight line and then back up. Now we can see we're potentially putting in some lower highs and lower lows on the weekly chart. It doesn't look as dramatic on the weekly chart because you're looking at such a zoomed out picture, but see what's happening now. So then this week, when the data came out, we had this little, what you could call a pullback in the COT. So I wouldn't actually be surprised if we see a little bit of a rally this week in soybean oil, and potentially see prices maybe pull back a little bit. Here's our daily chart, which has been pretty bearish the last few days. Maybe we see a little pullback, and that could potentially set us up for more downside momentum eventually. So let's see what happens. They are in the middle. I know we talk about not diddling in the middle, but I do think unlike cattle, they're not like intertwined with each other. They do seem to be pretty directional. So until they get back to an opposite extreme area, then I think you can potentially follow that trend. So essentially with soybean oil, I'm short here, or I would want to be looking for shorts. And these little pullbacks in the COT data could potentially suggest maybe a pullback, which could help us with better places to look for re-entry. And then if we look at let's look at the seasonality for soybean oil. Again, this is just an extra confluence that we can potentially look at. So let's look at this and see where we're at. And you can see, at least in the short term here, we're heading for some downside potential over the next couple of weeks. But then we do get a pretty big swing up. So we're short term, we're short term here. We are bearish in this market, but you can see that starting around early October, we do start to swing back up. So that's something just to note. Now, this little bearish run on the seasonality chart basically started in, let's call it like late July. And if we go back on the chart here and we look at the price chart, what do we see? Basically, starting in July, we peaked at this high and we started going down. So the seasonality on this asset, in that case, did kind of play out. Now, again, it doesn't mean it always will. If we just look back here, I'm just randomly finding a place where there was an obvious move in the other direction. I'm not looking at the COT. I'm just looking at seasonality. So this was like the end of May. And if we look at May on the seasonality chart, we do generally move higher from late May until the end of July. We saw that downtrend. So the seasonality on these, can really be very eye-opening. So although we're looking at potential down prices here for maybe over the next couple of weeks, I would be cautious selling soybean oil more long-term because the seasonality suggests that we will start to turn more bullish. So maybe these little bounces right here out of these extreme areas are short-lived, and we see like maybe next Friday, if this continues to head back down, where the commercials start to head back into the extreme short position, we'll see prices resume an upward tick. I don't know. We'll have to see what happens. But the seasonality on this does line up, but only in the short term. Okay. All right. So let's look at corn. Corn's probably the most obvious one to me right now in terms of, and historically in terms of look back is really good. And you can see corn heading, you can see overall the COT swings here are pretty clean. We do have a couple of times where they got a little jumbled up, like right here and right here. They crossed a couple of times. But we see it coming out of these extreme areas now after the last couple of reports. And generally speaking, as commercials come out of extreme long positions, the price generally goes up, and obviously the opposite, as non-commercials come out of extreme short positions, price tends to go up. And that's historically, as you go back and look, that generally tends to happen. And what are we seeing? We're seeing pretty bullish price action the last several weeks. This is the weekly chart. If we go to the daily, you can see we are potentially turning and starting to create higher highs and higher lows. I was in a long here. I did close it just because I didn't want to carry this one through the weekend. But really, any potential good pullbacks here, I think, are suggestive of keeping long bias here. And if we look at seasonality for corn, Grains, corn. Let's look at our corn seasonality. And again, a lot of this for grains and stuff is driven by weather and just harvest time. And look at the seasonality for corn. Again, this is why this one's very obvious to me, just in terms of confluence. It doesn't, again, there's no promises, no guarantees here. Don't just, go and buy blindly because of any of this. But you can see that from a seasonality standpoint, right around the beginning of September, all of these lines tend to line up, and we get a push higher that really lasts until right through the end of the year. And if you come to the other side of the chart, because this is like the end of December, and we come back, swing to the other side here, this is basically where it picks up in January. And you can see prices tend to go up right through into February. So I think, from a seasonality standpoint and the way the COT data is lining up, corn is probably the one that I'm probably the most aligned with in terms of both of these confluences lining up, okay, and price action. Now, we are still technically in a downtrend on the weekly chart, but you can see, we were coming down here several weeks ago. We broke this structure right over here. If we want to go back to just price structure, broke it here, pulled all the way back, retested this low, and then we bounced off of this low right here. We bounced off and started to go higher. So again, this is a weekly chart. It's hard to get a real beat on it, but the lower you go in time frame, you can just see, here's the 4-hour chart, how we were trending down, and then we've clearly made a shift right here. We have this big gap in the chart. I wouldn't be surprised to see maybe some sort of pullback to at least try to fill this gap. That wouldn't take a whole heck of a lot, and then have it go higher. So we'll see what happens. But overall, pretty bullish on corn. All right, if we go to, now we're going to just finish up here with crude oil and natural gas. You can see both of these are, these are sitting in extreme areas right now. They look like potentially we're going to see what happens over the next couple of COT reports. But, we've already kind of pegged into these extreme areas right now. So from a standpoint of this data, I'm not really looking to do too much until we start to come out of these extreme areas. And generally speaking, for the non-commercials, when we come out of an extreme short area right here, we generally go higher. And obviously that would be the same for the non-commercials to see a rally for the commercials to come out of an extreme long area. But if we look, so, right now, who knows? I mean, these kind of bent and look like they want to start heading out of these extreme areas, but who knows? I mean, we could come out this week and this thing could just turn. The next one could just turn and go right back, and just we could stay in this area for an extreme amount of time. And if we look at seasonality for crude oil, let's see here, crude oil. Let's see what we have. So what we have for crude oil right now is we generally have bullish seasonality here through basically the first week in October. And then we start a big downswing that basically lasts for about 2 months. So, we could see a short-term rally here just based on seasonality into October, and then, turn down. And again, from a seasonality standpoint, a lot of that comes because producers are basically, for like winter, are starting to, hedge for positions and stockpile supplies for winter, for heating oil production out of crude oil, one of the things they make out of it. And so generally by this point, they've kind of bought up what they need for the winter. They're doing that early, and then, prices will tend to drift down after that. So we'll see what happens. But from crude oil, that might be why we see this bending down. We'll see maybe a short-term rally for a few weeks. Maybe this will come down, and then, eventually we'll see a turn back to the downside. But we already are at very low prices. So from a historical standpoint, although we're not at this low down here was in 2020 with COVID, when everything just kind of crashed. So you can almost throw this one out the window where prices got down to, into the $37 a barrel. But, generally speaking, there is downside potential certainly in this. So I wouldn't be surprised if, again, we see a very short-term rally just based on seasonality and then a continued down, at least back towards these lows down in here. So let's see what happens with crude oil. But it's a little, we don't have any extreme changes right now. And then in terms of natural gas, we we came out of extreme areas on both of these back in late July, and they're now both heading into extreme areas. And so, basically speaking, this is a downside move coming out of the extreme short position for the commercial traders, and obviously the opposite for the non-commercials. And we've seen that with price basically going down historically again. As commercial traders come out of an extreme short area, prices do rally, and that is what we've seen here with prices. With prices going down, and that's what we've seen here since then. And then from a seasonality standpoint, for natural gas, I think it's a lot like oil. So let's see where we're at here for natural gas. So natural gas actually tends to be a little bit more bullish this time of year. We do have this dip for whatever reason in these seasonalities around mid-October, and then another little dip. But generally speaking, we have prices going that rally up until about the end of November, and then we start to see that kind of seasonal drop off that lasts basically into the end of January. All right. So again, natural gas looking at potentially prices going up. And, again, if we look back, excuse me, historically, if we get up into this kind of overbought, into this extreme bought area for commercials, and then, see it either touch this area and then maybe start to turn back down again, that would play into the seasonality. But right now we're heading into extreme areas. We still have the non-commercial still in this middle area. So at least in the short term, I would expect to still see prices continue to work a little bit lower. Okay. And then once we see the non-commercials get down and kind of line up with the commercials back into an extreme area, then we could potentially see this start to turn the other way. Okay. But so again, natural gas in the very short term, maybe over the next couple of weeks, still looking at lower prices. But then, like I said, eventually seeing this start to go up. Okay, and this is pretty choppy, but generally, we have an uptrending slope here that will, goes basically through late November. All right, so that does pretty much line up with that. But the energy markets, can be, I don't know, I don't find these to be as great with the COT data. I really like the grains. My favorite here are the grain markets, the soybean oil, corn, and the T notes. Those are the kind of the three that I really like the most, that seem to track really, really well. I'm still going to, kind of play around with some other markets. But like I said, I kind of put wheat and soybeans aside because I didn't find them to be as good. But soybean oil and corn seem to be really line up not only with COT data well, historically, but also with seasonal data. And so, if that's where I kind of start paring back some of my assets I'm watching, then so be it. As far as natural gas and crude oil go, I may just dump one of them and just keep one, and we'll see. And so I'm still back testing some other markets, but that's where we stand right now with these. And again, guys, remember, you're not trading off the weekly chart. You're just using it kind of as your baseline with the COT data and the seasonality, kind of looking at that. And then once you kind of set on that, to go back and look at your shorter time frames, and that's where you're going to enter, on whatever time frame. Especially if you're a swing trader, this is really good, helpful information. If you're a scalper, or maybe even a quick day trader, none of this is probably all that important, especially scalping. But if you're day trading or swing trading, I think just in terms of trying to stay with where the big money is moving, then this is definitely something that's worth looking at. And it can vary by market, but you can see I just went through 7 markets. And if you're a futures trader, some of these are probably things that you're familiar with. I have looked at this with gold, didn't find it to be very, very good. So I'm not using this with gold. Silver is actually a little bit better. I did do some back testing with silver. I'm still looking at that a little bit. So, like I said, there are various markets you can look at. I mean, they have this COT data for, probably 40 or 50 futures markets. So there's definitely places in there you can look. I did look a little bit with currency futures like the Euro futures. Again, didn't find it to be all that useful, in terms of any kind of consistency with it. So again, this is with actual commodities. I think it's a little bit better than things like, currency futures and things like that. Although the YM, the Dow futures are not too bad, but that market is like so extreme now on the long position that, I'm not sure how helpful it is. So I don't know for indices how good it is, but for Dow, at least historically, it seems to be okay. So I'll track that for now, but I'm not a big indice trader anyways. So right now, my two focuses, like I said, on this is with basically soybean oil, at least in the short term, corn, and 5-year T-notes. So anyways, guys, I'm going to leave it there. I hope that was helpful. Again, any questions or comments, leave them down below. And make sure you smash that like button, subscribe to the channel if you haven't already. And yeah, I appreciate it. And again, this indicator is the COT index, which is on TradingView. If you go to indicators and just put in COT index, you're going to find a whole bunch of them. But this is the one, I think this is the one I have up here, is just this first one by Dixon Chai. And it's very straightforward. And I took the only thing I did, I changed some of the colors. I reversed I think they had non-commercial, they had commercials in like green or something. So I basically switched the colors. So I switched commercials to green, non-commercials, commercials to red, non-commercials to green. And I unchecked the small speculators, which is, well, that's also green. I don't care about the small specs. That's you and I. So I unchecked that. So I only look at commercials and large specs. And I left the look back and the levels. So it's a 26-week look back. You can play with that, but that's generally about, I think a 6-month look back is generally pretty good. That's how it calculates the levels, because this is an index. This isn't the actual raw commercial commitment of traders. Not the raw data. This is an index where it basically plots it on this graph with an 80% upper threshold, 20% lower. If you want to look again at the actual COT data, and I'll just leave this here on the way out, guys. Again, you can get this in many websites, but on this Insider Week, if you just go to COT data, and if we just look at any of these right here, let me just pick, I don't know, let me just pick soybeans, doesn't matter. And if we scroll down here, let this load, I think, okay. This right here is the actual COT data, so that they build the index off of this. But this is the raw data that's just plotted on a line graph that comes out of the CFTC. Okay, so but then they can take this data and they can calculate it into an index, which is what you see on TradingView. Okay, so if you look back in time, like this area right here, this was back in March of 2024. And this is this is soybeans. If we go to soybean oil, since I have that chart up on TradingView, if we find an extreme area here, well, that's kind of what we're coming out of now. So this is basically what they do is, so this is, again, so if you want to know the actual COT data that's out there, this is a good place to look. This is what actually comes out from the CFTC. So this is just a continuous plotting. And what you see on TradingView is an index that's created from that data, basically with, like I said, like a 6-month look back period to calculate an index, basically give a ratio of those numbers. So, and again, I just don't have the small speculators on that chart, which on here is this blue line. So I'm only looking at the red and the green. Okay, so look at it either way. I mean, sometimes you can even look at like just crossovers where they cross each other or when they come very close to each other. That can also mean good areas where there is potentially either a change in direction or a confirmation. You can see all these areas where they cross. You know, right here they cross, the market starts going up. You know, right here they cross, market starts going up. Right here they come really close to each other. They don't quite cross and the market starts going down. But when they compress here, again, the market, they come together. The market has been going down, but it continues the downtrend. Here's a crossover here. And they're going up. They start going up. So if you don't want to use an index, you can just use the raw commercial data, the raw COT data. And I would look for times either when they're both at extremes and start to turn directionally. This is where the index would help. When they're at levels like this, where they're at extreme areas and they start, it's hard to know exactly based on this when that changed. That's why the index is nice. But this is another way you can analyze this data, just looking at the raw COT data. And when they either come really close to each other, compress together like this, or when they actually cross right here in the middle where the green crosses the red, red crosses the green. Again, forget about the blue line. Then those are potential areas as well. Okay, but those signals can be really late, but they're good for like, but you know, they can be really late, but they can also signal a change too, like we saw right here, like we saw right here, like we saw right here, right? These are all areas where the price tends to reverse or at least continue to either, that's where the reversal actually happens, or a continuation from a previous reversal coming out of an extreme area. So you can either, again, use the type of index indicator like this, or if you want to just look at the raw data, this is a really great website that just plots it all. And, you know, all of these markets are available, right? I mean, look at all the, you get pretty much any market where this is happening, you can examine on here. And this also has the seasonality too, which I just showed you, which is super nice. So, all right, guys, so that's it. Now I'm going to leave it there. Have a great rest of your weekend, and we'll be back this coming week. All right, take care.